Hi everyone, welcome back to Be Rich. I want to talk about a problem Warren Buffett is having. Sometimes in life, this happens where we start doing something and it is a blessing, and somewhere along the line, the blessing can turn into a curse. Is Warren's investment in Apple going to become such a thing? Of course, this is a purely intellectual conversation. I am nobody to compare myself or grade Warren. I'm just an intellectual conversation I thought I'll have with you to do a thought experiment purely. So don't get upset with my analysis of this. It's just if we do think about it, can we learn something from this? Is all my approach to this. So as I said, Warren himself is known to have a very cautious investing style, and notably this investment in Apple starting in 2016. This marked a significant shift for both Buffett and his business partner Charlie Munger from their traditional avoidance of tech stocks. Due to their complex and rapid changing nature, Warren and Charlie always shied away from tech stocks. Remember their circle of competence and staying within that, and they felt this was out of their realm. They don't understand it, and it's better not to invest in it, and there's no need to invest in it. After initially, Buffett was skeptical about investing in Apple, even hinting at the possibility of shorting the stock in the early years. After detailed analysis, influences from the new portfolio managers like Ted Welcher and Todd Combs, Buffett slowly changed his perspective. Notably, the strong customer retention of rate of iPhones was the biggest thing that changed his mind, where it's around 95% of the users of iPhone continue to stay in iPhone. And Apple's potential as a consumer goods business with price power influenced his decision. So the investment scales and gains, let's talk about that. Starting with the initial purchase of nearly 10 million shares in 2016, Berkshire Hathaway aggressively increased its Apple holdings. After initial purchase of around 10 million shares in 2016, Berkshire Hathaway aggressively increased its holdings in Apple. The subsequent years, investing about 36 billion. By the end of 2018, Apple stocks constituted about a significant portion of Berkshire's portfolio, bringing it really some tremendous unparalleled gains it's not seen. By now, Berkshire's had 5.9 stake in Apple at valued about $157 billion, with the firm sitting at approximately 120 billion in paper gains. That's the amount they gained. So if this is all great, Vinod, we all know about this bet and how it is a big part of theirs, and what is the risk in this, what is the challenges in this. I don't see anything. Right, I agree with you. So far in the story, we're looking back. Looking back, things can always be rosy, things can always look nice, and we can be either critical of ourselves or we can be patting ourselves on the back. And here is where the road can be different, because now we're slowly turning and looking at the present and moving towards the future. Despite the massive success Apple's given Berkshire Hathaway, Apple has become one of Buffett's riskier bets due to its high valuation and regulatory scrutiny and slowing growth. Three things Apple is currently going through is it's a very highly overvalued stock, and it's under immense regulatory scrutiny, not only in the US, but around the world. In Europe, it's struggling with this because it's become such a huge company, and slowing of the growth. Even Tim Cook has come out recently and he said, don't expect any great single digit growth. Even our single digit growth is going to be a very low growth, 1 point odd percent, between 1 to 2% is what he has said. So these are the biggest challenges for Berkshire Hathaway. Particularly what is happening in China is hurting Apple, and Apple is trying to reinvent themselves. Do remember when all this was happening, Tim Cook and Apple were in a different stage when Berkshire Hathaway was entering its investment. The company was in a different standing at that point of time. They had different trajectories and growth and product models coming in their pipeline. Customers' ideas of Apple were very different. But off late, things are not looking so rosy for Apple. After the failure of Vision Pro and the influence of AI on the tech sector, Apple is in a lot of problem. And the lagging efforts in artificial intelligence has been the biggest of them all compared to competitors, and it's adding more and more concern to what Apple is doing. Next comes Buffett's discussion with succession and the future and the management of Berkshire. When we talk about the future of Berkshire Hathaway after Warren's exit, a lot of questions arise about the holdings of Apple. How was a successor going to handle Berkshire Hathaway's substantial holding in Apple investment? Despite the recent trimmings of Apple's holdings by Berkshire Hathaway, the stake remains significant, and the management will have to take a crucial decision on this especially it's a big decision for Buffett's successor. What is he going to do? Because if you're looking at the long-term concerns and strategy, some investors have now started expressing, looking at the long-term prospects for Apple, the ability to maintain this dominance in the market and be the moat it had may have eroded, and Apple may not be able to do what it's done for Berkshire Hathaway in the past. And this is going to be the linchpin which is going to hold the decision, where Apple share seems largely strategic, and maybe it's better off selling such a large stake and reallocating this into a more result-oriented capital that's more effective for Berkshire Hathaway and its portfolio. So the current market dynamics of Apple stock, which has been experiencing this decline this year, contrary to the gains seen in other tech stocks in the broader market, is what is really putting immense pressure on people around Warren when it comes to their Apple portfolio. This decline amid Apple and announcing revenue decline, and recent quarters significant stock buybacks has helped. But despite all this, Apple shares trading 25 times expected earnings and suggesting it's still high valuation. So you can imagine, even after all this beating the stock has taken and stock buyback and a bounce it had, with that, everything put together, Apple stock is still trading at 25 times expected earnings, and that is still considered at high valuation. So if you were Warren Buffett's successor, or if you were in the team that was in the council of advisors when it comes to Berkshire Hathaway and Warren's team, what would your opinion be? That is what I'm curious to know. If you were in the helm or close to the helm and you had the ear of Warren, what would you say? Considering all the things where Apple stands and the track record where we are, is it time that Warren Buffett exits his holdings in Apple and reallocates those funds into a better position, spend the capital on a better investment which gives much better capital gains than where it looks currently where Apple stands? It doesn't seem like a long-term prospect to hold. That is the question which I want to leave you with as I finish this video. Do put down in the comments below, what do you think Warren should do with his holdings in Apple? Thanks for watching the video. I hope you found it informative and entertaining at least. See you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.